This might be controversial, but I truly think that crypto is more a game of timing the macro than timing the micro. Either everything is going down at the same time or everything is going up at the same time. There is all of this correlation within the market. Now, that being said, when we do the fine tuning, it does make sense to look at metrics like this. The Solana dominance. How much of all of crypto is currently in Solana? Does Solana outperform or does it underperform despite the general crypto trends? Because we can actually hedge our crypto investments. For example, if we are bullish on Solana, but we think that the general market is going down, we can, for example, go long Solana and then go short Bitcoin or Ethereum, thus taking advantage directly of the outperformance without having any macro exposure at all. Now, when we time something like Solana, when we want to bet on its relative performance, maybe it makes sense to bet on trends. Maybe we should follow something like a moving average, right? We go long whenever we are above the moving average. We go short whenever we are below the moving average. At what point in time does it make sense to buy Solana over other cryptocurrencies, irrespective of the general macro development? And when we follow a moving average like this, the question is always, what's the best duration? Is it this one over here? Or do we take a shorter moving average that's closer to the price? What times the Solana out and underperformance the best? Now, what I've done is a simulation of buying and selling Solana relative to the rest of the crypto market, trying to find the best moving average on the Solana dominance. And when we do that analysis, we can see that the 58-day simple moving average historically worked the best. Most trend followers tend to be better than buying and holding. So that's the reference line here in gray, but especially the 58-day works well. And so that's then how that looks like on a chart. We should still be bearish on Solana. We should still avoid Solana relative to the rest of crypto, according to this backtest. This is how the performance develops over time. Now, most of the alpha was generated in the first years when Solana was still very volatile. Unfortunately, in the last 2 years, that approach didn't work as well anymore. But overall, it did do a much better job. So holding Solana over the rest of the crypto space gave an outperformance of 37%, timing the market in Solana more than doubled our stack every year. The maximum drawdown is also reduced. The maximum drawdown duration is also cut in half from 4.5 years to a bit over 2 years. But there's a problem with that strategy, right? We get all of those bad signals. We end up buying high and selling low again and buying high again. We get all of those trading fees. We tend to not necessarily have a well-established trend following that moving average. It tended to work somewhat well, but the performance of the strategy has definitely degraded. And so what I like to do is I like to look at the combination of two moving averages. That approach tends to work pretty well for other crypto assets as well. It works for the US dollar prices. It works for the dominance charts. When we look at the golden crosses and death crosses, tend to outperform just direct price crosses. So here's what I mean. We go short when we've got a death cross. So when the shorter moving average goes below the longer moving average. We go long whenever the shorter moving average goes above the longer moving average. So that's a death cross, that's a golden cross. And here is the backtest for the best combination of moving averages for Solana. At the bottom, we've got the slow moving average. At the top, we've got the fast moving average. And every data point over here represents a backtest. And here, we've got the best combination. That's the 20 plus 21 day simple moving average. It historically outperformed much more. So that's now 185% per annum compared to only the 117% that we had with the price crosses. And have a look at the performance over time. Again, we tended to outperform in the early days, but even in the last 2 years, we still had nice performance. This approach worked better compared to the price crosses, where the alpha completely degraded in the last 2 years. It's not true for our golden crosses and death crosses with the 20 and 21 day simple moving average. So that's then how that looks like on a chart. Here's again the Solana dominance. Whenever the white line is above the line in turquoise, we should go long. Whenever the white line is below the line in turquoise, we should go short. And currently, we should rather be short. The result for the situation right now is the same. We should not bet on rising prices of Solana. But clearly, using moving average crosses tends to generate less bad signals. The win rate of the price following strategy is only 20%. The win rate of the trend follower is 35%. Now this still seems quite low, but the main difference here is that the average winner is much larger than the average loser. And that's typical for trend following strategies. Here the winner is roughly 4 to 5 times larger than the loser, and that then leads to the long-term outperformance. Now we can also try to lever this up. Here is a leverage optimization analysis. So we look at how much additional performance can we get if we go 2x long, 3x long, 4x long. And what we get from that analysis, that we should be rather careful with leverage. Once we go beyond 3x, we get knocked out. And the increase in leverage on the short position gives us barely any additional alpha. Most additional annualized return comes from the long position, and we don't want to get too extreme on that. Maybe 2x is already enough. If you're courageous and you don't bet too much, 2.25 or 2.5x might still be acceptable. But again, currently, I'm not expecting Solana to outperform the rest of crypto. Again, because the 20-day SMA is below the 21-day SMA. You can have a look at those simple moving averages yourself. So you simply just press / in TradingView. You enter simple moving average. Once you've done that, you double click on the line, and then you can change the input to, for example, 20 days. And then you press OK, and then you get this rendered. And that's then how that looks like once we've drawn this properly. All of those backtests come from a platform called Bitcoin Strategy Analytics. So if you're interested in running your own backtest with Solana relative to the rest of the market, or maybe just the Solana price directly, maybe Bitcoin, Ethereum, or any other altcoin, then feel free to check that out. There is the single indicator optimization, so we can optimize for the simple moving average, but also for many other indicators. There is the indicator combination backtest. So this is where we can combine two indicators. In this video, we combined simple moving averages, but we can also combine the exponential moving averages or a combination of different moving averages. We can optimize the leverage. There's also more advanced approaches like a regression analysis, dollar cost average, etc. I've also published my own trading strategies here coming from that platform. So I'm trying to trade just based on rules. I try to remove all of the subjectivity from trading and just use approaches that historically worked very well. If you got some value out of this video, feel free to give it a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. See you next time on YouTube or see you on Premium. Cheers.